Welcome once again to the Tax Advocacy Podcast, your reliable guide to Nigeria's tax system. My name is Arabiri Aderoke, and today we are focusing on something every Nigerian taxpayer should understand: the tax laws that govern us and the various taxes payable to the Federal Inland Revenue Service, better known as FIRS. Tax laws are the legal rules that guide how taxes are collected, who should pay them, how much they should pay, and what happens if they don't. In Nigeria, these laws are passed by the National Assembly and administered by bodies like the FIRS for federal taxes and State Board of Inland Revenue for state taxes. Let's take a closer look at the major taxes that FIRS collects. Company Income Tax, CIT. This is a tax on the profit of registered companies in Nigeria. The rate generally is 30% for large companies, 20% for medium-sized firms, and 0% for small businesses with annual turnover below 25 million naira. For value-added tax, this is a consumption tax on goods and services. Capital gains tax, CGT. This is paid when you sell an asset like land, buildings, or shares and make a profit from it. The rate is 10% on the gain, not the total value. Stamp duties. Stamp duties applies to certain written documents such as tenancy agreements, share certificates, and loan documents. The rates vary based on the type of document, so it's not fixed. Petroleum profit tax, PPT. This particular one is specific to oil-producing companies. The rate can go as high as 85% depending on the production arrangement. Tertiary education tax, TET. This is paid by companies and used to support Nigerian tertiary institutions. The rate is 2.5% of accessible profits. National Information Technology Development Levy, NITDL. This is paid by companies in sectors like banking, telecoms, insurance, and oil and gas. The rate is 1% of profit before tax. Whether you are a business owner, freelancer, landlord, or an employee, your tax obligations depend on your income level, your business type, and registration status. Registered companies must file annual CIT returns and monthly VAT returns. Employers must deduct and remit pay-as-you-earn payee on behalf of employees, even though FIRS handles it only for those in the armed forces, foreign missions, and FCT residents. Self-employed individuals and professionals may need to pay income tax and register for VAT if their annual turnover is 25 million or more. Investors may be liable for capital gains tax if they sell shares or property at a profit. Each tax type comes with its own timeline. Missing deadlines can lead to interest, penalties, or even enforcement actions. CIT file annual returns within 6 months after your accounting year ends. VAT file monthly by the 21st of the following month. Withholding tax also filed monthly. Stamp duty is paid at the point of executing a document, while CGT and TET follow timelines for annual company returns. However, you can pay online through the FIRS Tax Pro Max portal or at approved banks. Filing is also done electronically. That is it for today's episode on tax laws and taxes payable to FIRS. Knowing your obligation is more than a legal requirement, it is a civic duty. Join us in 2 weeks for another eye-opening episode of the Tax Advocacy Podcast.